Welcome to this November 9th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Taking a look at today's chart, we're featuring CVD, ticker symbol CVD, which is Covance. This is about a $2.9 billion healthcare company. The stock had been in a downtrend, as you can see, since back in spring into the early part of summer, and then we had a huge gap down at the end of July. Now this turns out to be an exhaustion gap. The problem is, at the time when you have a big gap down like this with massive volume, you don't know if it's an exhaustion gap to the downside or if it's a continuation gap to the downside, and they each have their own results, separate results. An exhaustion gap normally is going to mark a bottom off of a downtrend, whereas a continuation gap is going to extend that prior downtrend. So you really don't know until afterwards, until you have the benefit of hindsight, to determine whether or not it's an exhaustion gap or a continuation. In this case, we went down for a couple of days, got down to a low just below $38 on some very heavy volume at the end of July, after rallying back to test the gap resistance area at the top here, or actually it's the bottom of the gap, but coming back up, we got up to about 42, tested this area, and then went back down again. But notice those lows held. So in our mind, this is really more of an exhaustion gap than anything, and we got confirmation when we came back up through the 50-day and gapped up with this breakout in late September. So now it looks like we've got an uptrend that is underway. Very solid support from about $44.75 down to $43. Of course, $44.75 is the top of this gap support area, and then the prior highs before the gap up were at about $43. So you've got price support that comes in at $43, and check out the last 2 days, putting tails down right at this $43 level. And on Monday, CVD actually reversed, came back up and closed at $44.53, close to the highs of the day. We had highs of the day at $44.64, so literally within 11 cents of the high of the day. So CVD had a really nice reversal, put in this hammer right on the 50-day moving average. The MACD center line test hit almost exactly on Monday as well. You can see the MACD came down to 0.08, so literally almost right on the center line. And RSI, which during uptrends needs to hold around the 40 level. Normally that's where an uptrending chart, that's normally where you will see some serious support come in when the RSI drops to about 40, and right now we're at 41 and change. So there's a lot of reasons to like CVD here. From a reward to risk standpoint, it makes a lot of sense. Just getting back up to the recent highs would be our initial target, which is up close to $49. To the downside, $43 a close, much below $43, and we would likely be out of the stock, especially if the volume is heavy accompanying that move to the downside. So where we finished today, we've got about $1.50 downside, but about $4.50 upside to get up to the target. So that's about a 3-to-1 reward to risk ratio. And this was actually a chart that was put in our setups this past weekend for our members. And we talked about the stock having excellent support down to $43. So the reward to risk actually was better than even 3-to-1 if you used the weakness the last couple of days to enter a position. So CVD looks pretty interesting here. I would look for a reversal, especially off of this hammer and the line in the sand. You got a couple of tails down here that should hold as some good support on any pullback. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.